Well, let's put that question to Anish Tawakley, co-CIO equity at ICICI Prudential AMC. Anish, thank you so much for joining in. Your business is actually the most interesting one, right? So much is going on. Of course, you folks yourself are coming to the public markets and investors are eagerly awaiting it. Phenomenal response to the anchor book as well and the overall issue. But really, capital market as a play, now, as we saw yesterday as well, I mean, regulation is forever changing. But it is, the financialization story is also very, very real. So within this entire space of financialization, beyond the banks and the non-banks, beyond the lenders, how are you looking at the rest of the financial services space? And there's a lot of interest as well, investor interest. We've seen what's happened with a lot of these tier 2 banks and foreign investors wanting to come in. So let's start right there. Your view on investing in Indian financial services in 2026.
Yeah, Surbhi, thanks for having me. So the way I see it, look, while there is a long-term story of capital markets growth, one also has to be conscious that we are probably at a cyclical high, right? And one should be careful when invest. Even if there is a structural story, while we're at a cyclical high, you need to be slightly careful. We like banks, particularly the larger banks. So on the banking side, the way I see it, banking is an industry that's driven by scale. So and you can see in any country in the world, there are not more than 4 or 5 national banks. So when playing banks, I prefer larger scale banks. I'm not of the view that capital will help solve some of the problems of the smaller banks, because capital has never been the problem. The problem has been distribution and customer franchise. So in banks, I would stick with the larger banks. In the capital market side, one has to be conscious of cyclicality also. And as we've been seeing, some of the smaller cap stocks have not been doing well. And that will create some pressures in the brokerage side of the business, which I think is very, very transaction driven. Because transaction activity is probably at the peaks, at a cyclical peak.
Okay. Anish, hi, morning. You want to comment on AMCs? I know you're a part of one and yours is coming to the market, but as an industry on AMCs, because the big risk, even when your IPO was open, was more on the TER front. I know the impact is softened. It's a lot less compared to what was feared in October, but as an industry on AMC, what is your view now?
So given that we are in an IPO, there are constraints on what I can say. What I would highlight, though, is that regulation, particularly when it reduces expenses, has over the longer term helped grow the industry because the product becomes better for the consumer, and that always helps the industry growth. Both transparency and cost reduction have always helped the industry. I think the one other point I'd make is I think AMCs are less cyclical than brokers because the asset base is steady. And the AMC industry is less capital intensive than, say, other parts of the financial services industry like banks or insurance. So what ends up happening is that the AMC industry is able to pay out a higher proportion of its earnings than some of the other capital intensive parts of the business.
Speaking of capital, Anish, and you said capital is not the real issue for banks. I want to ask you that same question about insurance. Whether capital is the real issue for insurance or not. In fact, I wrote a piece on this. We'll probably put it up today. So, yes, there's 100% FDI now. But does that move the needle, really? Is that the real issue? Behind 1% penetration of health insurance in this country and 2.8% penetration of life insurance in this country at a time when the mutual fund industry seems to have done a lot better. What's your take on the bill and overall insurance as a space to invest in?
Oh, we like insurance, but I like life insurance more than general and health insurance. I think the way I see it, life insurance, particularly if you look at LIC, which has been the historical player, actually has been has actually done a reasonably good job of reaching out to various segments of customers. Now, the problem with health insurance, particularly in my view, is that health insurance is less about delivering healthcare than about managing fraud. And that is always very challenging, right? You have to manage fraud from the hospitals, fraud from the patients, fraud from the doctors. So health insurance is actually very, very difficult industry to manage. And I'm not sure we've had models that have demonstrated sustainable performance in that industry yet. So I am not I'm not confident of how the health insurance industry will play out. Life continues to do well, but I don't think the issue is capital there. There's actually cross businesses, right? Given the state of the capital markets, capital has not been a problem for anybody with a good business.
Anish, to move to a very different subject, and this is not really about a particular stock or a particular IPO, but I wanted to get your sense on what's happening in the market. And I'm only taking Meesho as an example. I mean, an issue comes in at 100 rupees and the stock doubles in 7 trading sessions. So is what we are seeing, I mean, did the iBankers get it wrong? Or has the market become very, very short-sighted in terms of the whole price discovery mechanism and then discounting the future? What is really going on with some of these new IPOs? And they do have a layer of tech. And since we don't have deep tech or AI, I don't know if that's what's causing the excitement. But as someone who's managing a large sum of money, how do you look at some of these consumer tech issues and what's happening to the price?
So look, when I manage funds, my criteria is I want to have a demonstrated track record of profitability before investing. And that has helped me. And while IPOs do very well in the initial spurt many times, you can also see if you look at the 5-year performance of IPOs, that's not so great. Because when an IPO is coming, one has to remember it's the promoter is effectively diluting, he's effectively selling. And therefore, you have to be careful about, how, and at that time, obviously, performance is probably at a very peak level. So you need to be careful about how you extrapolate that. And I think that has worked well for me. Look, in general, in the markets, I would say, when you're seeing a lot of promoter selling, a lot of private equity selling, you have to be careful. And that is what has been happening in the small and mid-cap space, right? And if you look at that overall space, it's kind of weakening. Because, I distinguish, I say there are 3 types of companies. There are hardware companies, there are software companies, and vaporware companies. Vaporware companies being ones where the narrative is way in excess of the reality. And I think those narratives are being exposed. And I expect that to continue. So small and mid caps, I would still be careful. Large caps, I think, are offering a reasonable risk-return trade-off over a 3-year view.
Anish, what else do you like going into 2026? What are the big themes that will dominate investment?
So our view is that the economy will regain momentum, right? So we think we are positive on the economic outlook. And as a consequence, we like basically sectors that do well when the domestic economy does well. So that's stuff like financials, it's stuff like industrial and capital goods, automobiles, and also cement. In financials, the one area where we are concerned is the unsecured consumer lending space, which we would avoid even at this stage.
Okay. All right. Anish, final question before we let you go. What about the EMS space? That's a space that has a long runway. India is growing at more than 30%, the EMS industry. China, obviously much larger than us. That's growing at around 10%, while the globe is growing at around 5%. Any view on this EMS theme? Because the space appears, it has a long runway, but valuations got a little too frothy. Your take post the recent correction?
Look, I have avoided EMS companies. I'm not sure of the competitive advantage that these guys have built. I think the market is making a mistake by giving a multiple to PLI earnings. PLI earnings are reported as part of normal profits and the market is giving a multiple on that. That is not correct because those are non-recurring earnings. So if you exclude, the way you should look at PLI earnings is exclude the, EMS spaces, you should exclude the PLI income from the profits and value it. And you know what absurdity has been happening as a consequence of this? A company gets a PLI of 1,000 crores, its market cap goes up by 10,000, 15,000 crores. Now, what does this mean, right? It means that there was an opportunity for a company or a business to write off 1,000 crores and create 10,000 crores of value. You didn't need the government's money to write it off, right? Your investors could have done it in any way. So when I see that happening, right? When I see a company getting 1,000 crore PLI and its market cap going up by 15,000 crores, I say, look, what are we saying about ourselves in the financial markets? That here was this great opportunity, which we, as with all the leading mutual funds, venture capitalists, private equity investors sitting here, were not willing to fund. But now that the government has funded it by 1,000 crores, we are willing to back it. So I find this whole EMS, which is backed by PLI valuation, completely I can't understand.
That's an interesting point you make over there, and one that we will definitely keep in mind. Anish, finally, just coming back to that whole issue of tech and the lack of deep tech and AI themes here in India, which also kind of circles me back to a lot of these consumer companies which have a layer of technology built into their operations. Now, it could be it could be an e-commerce player, it could be a lens cart, but the fact is that they all project a layer of smart technology. Now, in 2026, how should investors think of technology, both in the traditional sense, IT services? TCS just yesterday kind of gave us some glimpse of what the AI revenue is looking like for the company. So how should one look at IT services? Would you like anything there? And how would you look at new age, so-called new age technology in the marketplace?
So, our sector views are best reflected in our business cycle fund. And if you look at the published portfolio, we are running IT 0 in that. But I'll distinguish between the sort of mature software services businesses and new age tech businesses. See, I'm avoiding the mature software services business because my view is that the US economy will probably cyclically weaken from here. Right? I think US economy has been cyclically very strong, and I expect that to weaken. So I'm avoiding the IT services space. On the new age tech, look, the way I see it, I'm not sure what the real market size is, right? Because when you're operating with losses, obviously you can sell a lot. I always say that, if you go to, in a gurudwara, the langar is always full. You're giving away food free. It will always be full. When you try to convert it into a restaurant, that you cannot expect the same market size. So I am careful of companies that are, losing money and growing, because the true market size may actually turn out to be smaller when they actually aim to make a profit. So I'm quite careful in this new age tech. I think the problem scale might not solve the problem. In fact, you might find that the companies have to shrink to improve profitability rather than scale up to improve profitability.
Okay, all right, Anish, appreciate you joining in and giving us that view. I'm not sure whether we'll talk for the remainder of this year, but all the best towards the end of the year, and see you in 2026 on
Thank
Personal
you,
Note.
Nigel. Thanks.
Thank you.